Hey traders, Raghee here, and in this update we're going to walk through what I call the tail wags the dog season, what we all call earnings season, and that is where the higher volatility moves of individual stocks that are weighted within sectors and in indices can have outsized impact on, for us as futures traders, our indices. For stock and ETF traders, the implications are kind of similar. So kind of want to weave these worlds together, and specifically talking to my futures traders, we can't ignore earnings season because the heavily weighted stocks within the indices, within the sectors within the indices, can have major impact on our world, NQ, ES, YM, etc. All right, so let's just take Netflix as an example today, right? We know Netflix earnings came out. Now, a couple questions people ask is, Rog, how do we know what kind of impact Netflix can have on the broader markets? Now, if you've never gone back to look at your stock exposure within the indices and within the sectors, it may sometimes come as a surprise when you realize all the overlap you might have in your portfolio. But let's talk about even from the exposure you'll have as a trader. Netflix is weighted heavily in both the XLC, Communications ETF, and also not weighted heavily, but it does have weighting within the CLOU. In XLC, it's about 4.25% in the XLC. Now, why would that matter to futures traders? Why would it matter that Netflix has a prominent place within the XLC? Now, what else is in XLC? Facebook, Goog, Warner Brothers, TMUS, T-Mobile, Comcast, and then boom, coming in right after Comcast is Netflix. What else is in that list? Verizon, Charter Communication, Disney, Activision, AT&T, Twitter. So you got an idea of the kind of group that Netflix is hanging out with. XLC is the number 2 weighted sector within the NASDAQ. So this isn't as if we were looking at the stock weighting of the NASDAQ and saying, okay, Netflix is a prominent holding within it. This is more along the lines of Netflix being a prominent stock within a sector that's second heaviest weighted. So this is not as important as Apple, Microsoft, Amazon, Tesla, Google, Nvidia, Facebook coming out with earnings, all right, in terms of its impact to the NAS. But this is going to, in many ways, still have some negative, limited but negative implications. So this is one way immediately traders can understand the weighting an individual stock, the impact an individual stock has. Now, where is Netflix right now? For those of you that have never turned on the extended hours on your platform, I'm on TOS right now, just extended hours under the equities tab. I do not highlight it. Just click that and you will see where this thing is sitting. So Netflix rallied with the broader markets today, only to find itself at $268, which is almost off the chart at this point, down in this area on the daily. All right, so that's a significant move. But I want to show you all something else. You've probably heard me talk about this in Charts and Coffee. Double red downtrends. Anytime we're playing earnings, and earnings do matter to futures traders, right? And I want you all to be fluent and fluid in multiple types of trading and multiple asset classes. Stocks, ETFs, futures, Forex, crypto, you name it, right? Options, of course. Netflix is already in a downtrend. And if you have checked out over at countdowntrader.com, the 642 earnings update, where I explain how I trade earnings starting 6 weeks out. Really the prime spot, the prime window opens up around 4 weeks out, and I don't want to enter really close than 2 weeks before expiration. That means we've got Netflix or any stock coming into earnings on the radar 6 weeks before. Minimally, we're already looking at this 4 weeks out. So if we've got to have a earnings on the 19th, this thing's already on the radar. This thing's a go in March. That means any of the rallies into the wave within the context of a double red downtrend is an opportunity to buy a put, right? Rally into the resistance. Now, I say any, that's not exactly true. We want to make sure that we're not doing the trades much closer than about 2 weeks to expiration. So really in here, that'd be about your cutoff. But take a look in between the 19th and the 5th. Look at this window where you're taking advantage of the movement higher into the wave, and you can take advantage of this here. Now, if you decide, now think about this, what kind of flexibility do you have to hold your long put position into earnings if you bought it up in here? A whole lot more than if you bought it today anywhere near the highs. A whole lot more than if you bought it any one of really these days. So think about the timing and the location of when you bought your put and the latitude it might give you to maybe scale out of half of your winning position before earnings. Take the other half and see, all right, let's see what kind of shockwave trade we can get. Shockwave meaning I'm going to hold it through earnings, right? So I know this is not our traditional futures conversation, but we are in tail wags the dog season. And as we get to more impactful names within the weighting of our indices, right, it's going to get more and more important. Johnson & Johnson, that's the kind, so let me show you what are the kind of names we have to pay attention to. Here's Netflix. Johnson & Johnson was another one of them. Tesla tomorrow. That is going to have implications for XLY. That's going to have implications for the NASDAQ. It's going to have implications for the S&P. So that stock, major tail wags the dog situation. And as you go down the list, you'll take a look at some of these names and you'll think about where are they weighted in terms of sector and where are they weighted in terms of the broader averages. Google, again, far broader implications. Microsoft, far broader implications. Visa, same thing. Facebook, same thing, right? And then some of these are more minor implications, like Comcast, back to the XLC, back to that sort of displaced impact on the NASDAQ. Now, Comcast is interesting in that it's weighted within the XLC and it's a top 15 stock in the NASDAQ. This is where you need to be fluent in these weightings, right? This is where when you understand the implications of weighting, high concentration weighting, and sectors, you're going to find all these connectivity. So I thought today would be a great opportunity to, one, explain to my futures traders why stonks individually do matter. And if you're watching this as already an ETF or a stock trader, well, you know this, right? But maybe you've never thought about the weightings. So you might say, Rog, where the heck do we know where the weightings are at? Look, you can find this over at Yahoo Finance. You can find this at a bunch of sites. The one that I like is etfdb.com. I don't know these folks. I use their site every day. I mean, if you're in the Sector Secrets Mastery with me, we practically live in this thing, right? So check that out. Know where your stock is in tail wags the dog season. Hope this helps. Hope this is a needle mover for you. If it is, smash that like button. If you're still confused about some of the concepts, I totally get it. Leave a question in the comment area below. I check them in the evening, in the morning before I go live with charts and coffee. So I'll see you all at 9 a.m. tomorrow right here at the Simpler Trading YouTube channel for our next live show. In the meanwhile, be good to each other. Know where your stocks are in tail wags the dog season. Is it in a trend? Check out the 642 earnings window article in the countdowntrader.com. Yeah, I'm giving you a little bit of homework. I'm telling you, gang, it's going to help you a lot. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.